All right. Good morning, everybody. Hopefully you guys can hear me. So today is Wednesday, um, Wednesday, February 5th. Just to kick off. So right now I am testing out this gold cell right here. So again, this is a continuation level. It's a break and continuation. So as I told you guys, this break and continuation entries, I need to fine tune them more. I did take it on one account. The reason I did not take it on my main accounts is that, again, the profitability for the break and continuation is not as good as the test and rejection. But here, this was a nice entry for a break and continuation because here we have uh, this level that was created, this hourly sell, and then price closed below it. Now, for the break uh, level, right, you want to set the pending order at that level, and then you would expect price to come back down. Now, here, this one did satisfy all my three confluences. So if I go back and put those confluences here, it did satisfy all three confluences right here. So the three confluences, confluence number one, you either have a rejection or break of an SAR, which we did have here. And then number two, if buying, make sure you're in a green zone. If selling, make sure you're in a red zone. So if I turn on the zones indicator, this was in a red zone. So this green zone wasn't there when I was setting the pending orders. So one thing to note, once you're backtesting or once you're using the bar replay tool, some of these zones will not show up the way they did show up in real time. But anyway, when I was setting the pending order, we did not have this overlap because keep in mind, if you're setting or if you're setting the pending order in real time and then you have this overlap of supply and demand zones, that is a red flag. But anyway, when I was setting it, we did not have that green zone in there. And then number three, we didn't have any bearish or bullish order blocks around the entry. But again, here the reason why this is a risky, or why I don't like trading the break and continuation, most of the times when you have a break, you can easily get a fake out, right? So in most instances, what I've noticed is that you have an instance where you have that accumulation, and then you have manipulation to the downside or to the upside, depending on what area you're trading. And then price can easily come back above that structure it did and then break up. I forget what ICT concept that is, but it's accumulation, manipulation, and distribution. So that's the big issue I have with the continuation entries. However, so I only took this on one account. Um, didn't take it on my other major accounts. This one right here, to my left, this was a trade I was following yesterday for US 30. And for this particular trade, I let's see. So for this particular trade, if we replayed, so I didn't enter it. I was just following it because again, I'm documenting all this. I'm looking for examples to document on the PDF that I'm creating. So this particular entry right here, if we replay this, so I think this was more of like a B setup because in this instance, what did we have here? Let me see. Yeah. So for this instance, the reason I was testing this out, so remember when I was telling you guys, make sure, like, what is confluence number three? When you're selling, make sure you're in a red zone. When you're buying, make sure you're in a green zone. So this, as much as it lined up with confluences one and confluences uh three, it didn't line up with confluence number two, right? So pretty much some of these trades that I'm documenting, it's pretty much just so that I can take screenshots of before and after, so that we can see. I can give examples in the PDF of what can happen when you don't follow any of the three confluences. But anyway, so this satisfied confluences ones and three, but it didn't satisfy confluence number two because you can see for this entry. Um, this sell, as much as this candle rejected and closed below this level, we did not have a red zone in there. However, right, the trade did start off in profit, but and for this particular one, the reason I also did this, I also extended the TP pretty wide. I went for like a 300 point TP and stop loss for US 30, which is pretty high. for US 30. But anyway, so this trade, I'm still following it so that I can document that on the PDF that I'll create. So that's pretty much why I have that marked up. But if you see where US 30 is heading right now, we are heading to another SAR level. So we have this weekly buy right here. So if we have a candle reject and close below this zone, again, I wouldn't take that trade because remember, what is confluence number 3? As much as here we are coming into a supply zone for US 30 where that rejection level is. If you remember confluence number 3, which is here, if you're buying, make sure you don't have any bearish order blocks around your buy entry. If you're selling, make sure you don't have any bullish order blocks. So if you see right here, if I attempted to say enter a sell here for US 30, if I do get a confirmation, I'm selling where we do have a 4-hour bullish order block. So that again would not line up with this confluence number 3. So again, this is why for this strategy, right, again, it takes a while before you get the confirmation for entries. But once you do get those confirmations, you know, pretty much they have a high hit rate. But anyway, so I'll keep following this one. Again, the only trade between these two that I'm in is this gold sell for a break and continuation. If we do get gold closing back down below this level, I do anticipate gold to shoot back to the downside. But the best thing with this sell entry right here is that if you ask yourself, if you guys remember some of the demonstrations I was doing yesterday, ask yourself, if gold is to sell from here, where would they go to in order to pick buyers, right? So you can see my sell entry is next to a supply zone. My sell entry is next to this hourly sell SAR level. So if they are going to take buyers, sure, definitely, right? They can shoot price up from where it is right now. But looking at the structure of price and looking at the indicators that we have here, you can see that we have a level of demand here between 28.48 and 28.40. And also there we do have the hourly bullish high and low, or the high and low of a bullish of an hourly order block. So if they are to pick buyers for a nice push back to the upside, they're probably going to come back here at 28.44, which is ideally where my take profit for this trade is. Now, yesterday, if you guys remember, during the live session, what did we talk about for gold? So yesterday during the live session, I think gold was at like 28.30-ish. So let me see. Yeah, yesterday for the, wait, give me 1 second. Let me see. Never mind. I thought we'll get an entry for US 30. So yesterday during the live session, what did I mention? I did mention that I was looking for gold to get to the 28.70, 28.50 first and 28.70 region. Why is that? The first reason for that was, what is the next, right? Psychological levels are, you know, they ideally go in tens, right? Increments of tens. But if you have a strong bullish momentum, especially on gold, like we had yesterday or for the last month or so, where gold is moving like $100 every week or something. Now, the psychological level will be increments of $50. So yesterday, I did mention yesterday, if you go back to the live session, the first area of gold to reach yesterday was 28.50. Unfortunately, we didn't get any entries for a buy yesterday on gold, but that was the first psychological level. But since smart money, or even whatever you want to call it, they know that a lot of people have pending sell orders at 28.50. What will they do? So most likely what they'll do, they will come here at around 28.50, have a slight rejection, but then push price up. And I did mention that yesterday I was expecting gold to head to 28.70 region. So if you look at gold historically and you look at the moves, when gold is bullish or even bearish, but moving in small increments of like $50 pushes, like within a day or 2 days, when it gets to a psychological level, like say 2000 or something, most likely it will go to an increment. It will push up like another $20. Ideally, to stop hunt the people who have or not even to stop hunt, but ideally to push past that psychological level and go to a level that's a bit higher so that it can take off that liquidity that's in those psychological levels. So yesterday I did mention that I was expecting a rejection for gold at around 28.70. So 28.50. And then, but I did mention if I was to sell gold yesterday, I would wait at around 28.70. So you can see, assume somebody had like a pending order yesterday at 28.50. So you can see yesterday, 28.50 got to 28.50, pushed past 28.50. So that person would have gotten stopped out. And then overnight, gold got to that 28.70 region right there. So that 28.70, 28.75 region. So again, I still think this is a nice area for gold to reverse based off of that as well. But that doesn't have to happen. The market will do what it wants to do, and that's the only reason why for this sell I'm in for gold. I've already factored in the risk, and I know that for this particular trade I only entered with one account because it's one of my least favorite strategies. The break and continuation strategy is especially when it comes to SAR levels, I don't prefer it as much. Now, if we go to, so this is the hourly time frame. So currently on the hourly time frame, again, for me, remember, I'm looking mostly for the rejection entries. I'm not interested in this break and continuation entries. So nothing for US 30 for a rejection, even for gold, nothing for gold for a rejection on the hourly time frame. When we come into the 4-hour time frame, same thing for 4-hour time frame. Here, so this US 30 sell right here is pretty much, the entry was similar to this hourly time frame. So the entries were pretty much similar. This was 44,500. Same thing with this 44,500. So these two entries pretty much lined up. But again, for this US 30 trades that are right here, this ones I'm not in them. I'm just documenting them for the PDF that I'm creating that shows, that shows education on all these entries. But if anybody has any sell confluence for US 30, we are in a nice sell zone. The only issue, if you look up here at 44,600, we do have a bullish order block, a 4-hour bullish order block. And it's above the supply price. So price can, or it's above the supply zone. So price can easily break above this supply zone, come here, and then go back, all the way up there. But anyway, so this is a 300-point stop loss and TP on US 30 if anybody were to enter. So if you were to lose that trade, that just means price is super, super bullish because 300 points is pretty heavy for US 30, or it's pretty wide. On the daily time frame, nothing as well here that comes up. On the 15-minute, again, I don't trade 15-minute and 30-minute time frames for the SAR rejection strategy, which is ideally what I'm looking for. But even looking up here, there would be nothing for the 15. Actually, wait, no, there's nothing for the 15-minute, nothing for the 30-minute. Same thing. Okay, so for gold here, we do have let's see if this, give me 1 second. Let me reload that indicator. There is a sell. I want to see if we're in a supply zone here for gold on the 15-minute. Okay, yeah, so for gold as well, if I was trading the 15-minute entry, this right here would be, I would have set a pending order there, stop loss somewhere above the previous high. So I round up, so something like this. So there is a entry. If I was trading the 15-minute, again, I don't trade the 15-minute and 30-minute, but just to recap how you do the strategy, which is pretty much what I've showed you guys for the 1-hour and 4-hour, right? So you'd wait for that level to be created. So since here, this is the 15-minute and 30-minute time frame, I turned on the 15-minute and 30-minute levels. Again, just a reminder, for me, I only trade 1-hour levels and above. So you see how here it says 15-minute buy or 15-minute sell. For me, I only trade 1-hour levels and above, and I only trade them 1-hour time frame and above. But you can scale down those time frames for people who are scalpers or for people who just want to be in the trade for like 10 minutes or less than 10 minutes. The thing with the 1-hour and 4-hour time frames, that will be an intraday trade. which means you'll have a wider TP and stop loss than somebody who's, say, trading on the 15-minute and 30-minute. But here, this one, you'd be in a supply zone right there, and then you'd set your pending order. So this one would have satisfied all three confluences. So confluence number one, you wait for creation of a rejection level, which was here, and then you wait for the first candle that that interacts with that rejection level. So if you have the first candle that touches that rejection level and closes below or above, depending on the direction you're trading, that is a rejection entry. But if you have a candle that breaks through that level and closes above or below, so in short, so if you're doing a sell, the rejection candle should close below the that SAR level. If you're doing a buy, the rejection candle should close above it. So ideally it would be below the candle. So here you see the difference between these entries. So this entry is a rejection entry, but that entry on the 1 hour time frame, this one right here, this is a break entry, because here what happened, we had this candle that closed below. So that's a break entry, break and closure. Rejection entry is just rejection of that level. So here, if I was a 15-minute trader, then here I would set my pending order there, and then I would have gotten tapped in. But again, this trade would be in drawdown. So again, I do not trade the 15-minute time frame unless now I get an account where I'm trading the 15-minute time frame. I wouldn't even be looking to take this trade because it would just interfere with my statistics and journaling. But for anybody who is who trades a 15-minute and 30-minute time frame on gold, this one ideally, this fits all rules for a sell on gold. But other than that, I think I'll look at the other template right here to see if we can get a trend line and SAR rejection entry for today. So I did mention for these entries here, for these hourly and 4-hour entries here, most of the times we're not going to get them during the live session. So you can see even for this one, it came up at 8 a.m., the 8 a.m. candle. So for these entries, since they are hourly or 4-hour, we are rarely going to find them coming in on the during the live session. So the only entries we'll probably be taking are the trend line and SAR rejection. So let's see. So I'll share the other screen that has the trend line and SAR rejection, and then we'll see if we do have any particular entries for that. Let me see. Even hopefully I'm sharing the right screen. Okay, yeah. So this is the right one. So for US 30, to move this down here. Perfect. So for US 30, nothing on the, so US 30 is at resistance, so nothing for a buy right now. So the only thing would be a sell entry. I wish we did have a SAR, a sell SAR line here, because this would have been a nice sell for US 30 here based off of how price is shooting down. But we did not have any SAR lines here. So unfortunately, nothing for US 30 as well based off of where price is at. For gold, so gold is in consolidation right now. Gold is in consolidation right now. So I don't see any, in any case, it's closer to the resistance line instead of the support line. So nothing again for gold based off of where it is. Same thing. So nothing for a sell, nothing for buy. For BTC, let's see. BTC price is in resistance line on the 15-minute time frame and on the 30-minute time frame. So again, nothing for buy. So if you see all these green lines, so I use the green lines to do buys, and then I use the red lines to do the sells. So here we might get, let's see. I was gonna say we might get a sell entry for BTC, because if this 15-minute candle closes for BTC, this trend line, I'm almost sure this trend line will shift to this high, and then we'll probably get a rejection resistance, and then probably something like this. However, the issue with this particular entry would be, so this one would be So let me show you guys the. So if we do get that rejection resistance right here, if we turn on the zone, so remember, what are the red flags? When we're looking at the zones, we do not want to see this. We don't want to see, let me use this brush. We don't want to see this overlapping yeah. So we don't want to see this overlapping of zones. So you see here where the supply zone and demand zone have overlapped. So we don't want to see that, because as much as price can easily, so let's say this trade validates, right? And then we set either a pending order or we enter at market price here. If price gets back to this demand zone, they can easily push it back up to, to stop loss. So that's why I always talk about overlapping of zones. You don't want to enter a trade when there's overlapping of zones. As much as your sell entry is in a red zone, this is a red flag. Like the whole setup, as much as it would be satisfying confluence number 1, 2, and 3, confluence number 2, which is if buying, make sure you're in a green zone. If selling, make sure you're in a red zone. You don't want to see that consolidation or overlap of price, because it would ideally dilute that second confluence, if that makes sense. So anyway, so we'll see how that closes so that I show you guys. But if it closes and then this whole demand level is taken out, then that one I would be willing to take it. But again, we would have to wait for this 15-minute candle to close in the next minute and a half. So on the hourly time frame, nothing as well. For US 30, gold and BTC, nothing for a sell. And then for our time frame, nothing as well there. Daily time frame, nothing for those as well. So we'll just wait and see whether we get an entry either for US 30 or BTC. So let's just observe how this BTC closes in the next minute, and then we'll just go from there. But if you guys have any questions, feel free to let me know. Again, today's live session will be pretty short as well, since I really don't see any other entries worth taking. So, but anyway, let's see how this BTC trade closes, and then we'll follow with that. Right. All right, so we did close on that 15-minute candle. However, we did close on that 15-minute candle. However, so you can see the trend line did adjust right there to the upside. However, it did not give us like a rejection resistance. In any case, we got a rejection of support. So if we go back here to the rejection of support here, if we had a green SAR here, then that's, let's see, if we had a green SAR here, actually, even though we had a green SAR, it's nothing that I would take, because we are still in a supply zone for BTC. So even for BTC, I don't see any trade currently. So we had US 30 rejection support on the 1 hour. So same thing here for US 30. We just closed with this rejection support. However, for me to take so remember, for me, when I'm trading this rejection supports and rejection resistance, I need price to close above or below an SAR, because my entry is at the SAR. So here on US 30, we did close with a rejection support signal on the hourly time frame. However, we do not have an SAR to even trade with. So also we have a US 30 prime break support on the 15-minute time frame. All right, so here we have a prime break of support on the 15-minute time frame. So if you can see this candle, it broke and closed below the trend line. So in order to get a break of support or break of resistance, the trend line needs to stay static and does not need to adjust. So remember what I told you guys with this prime break of supports, or prime break signals. So if it's a prime break of support, most of the times you'll find that As much as this would be a sell entry, you would be selling into demand, right? Because you can see here, you're selling into demand because it just broke support. So here for this particular ones, you need a lot of confluences to even think about taking these trades, which is why I mentioned for this prime break entries, the best time to enter them is during Asia session or all the way before open of London, because you have low liquidity and the candles are smaller. But anyway, so this would be a prime break of support. So if we were in a red zone here for US 30, then I would be looking to take this sell for US 30. But if you guys do remember that the hourly chart and 4-hour chart that I showed you guys, and I'll move back to those charts. So US 30 would be dropping again based off of the other charts. So based off of where we are, for me, my confluences are lining up for sales on US 30. But unfortunately here, if we were in a red zone here, this would be a nice entry to have taken for US 30. Maybe like a 1500 point, 150 point stop loss and 150 point TP. So this one would be a nice one, actually 200 point, in order for your stop loss to be above the previous 4-hour bullish low. But anyway, if it doesn't line up with my confluences, it's nothing that I'm even looking to take. US 30 rejection support on the 30. So here we did have a rejection support signal on the 30-minute time frame. However, it did not close above any SAR. So again, this rejection support signal on the 30-minute time frame would be invalid. And then we have that BTC rejection support on the 15-minute. Even for it, we did not close above any SAR level. So I don't see any entries for a trend line and SAR rejection right now. So what we'll do, I'll just go back to the other screen, the one that has those gold and US 30 trades, and then we'll just analyze them. And if you guys have any questions, you can ask. But other than that, that will be it for the live session. So you can see this trades. So remember, this US 30 trade from yesterday, and hopefully I'm sharing the right screen. This US 30 trade from yesterday, and I think it came up during market closure. Yeah. No, actually, the 1 hour came up at, the entry would have been at 3 p.m. Eastern time, and then the 4-hour would have been at 5 p.m. Eastern time, so close of market. So you can see this one for US 30. The good thing with this is that we did have this weekly bearish low, but the reason I personally did not take this particular trade is that if I go back here, we didn't have an area of supply. So that's the only reason I didn't take this trade. But I really liked the setup. I was hoping for price to maybe push up to this. I think this is hourly bearish high. But yesterday, the only reason I didn't take this is that we were in so I call it no man's land. So if I get an entry that's neither in supply or demand, I call it no man's land, and automatically I do not want to trade in that zone. And I just let it go. However, you can see if it's a C setup, so this is where it's up to your discretion, right? You don't have to trade like me. It's all about looking at what entries make sense. If you do remember when I showed you guys the statistics of the backtesting for last year, the statistics were based off if you took every single entry and didn't care whether they were bullish order blocks and didn't care whether you were if you were selling, you were in a supply zone, or if you're buying, you're in a demand zone, like the win rate would still be high. But again, for me, I just decide to make sure that I'm aligning all three confluences. But this one would have been a perfect trade yesterday if here we had a red zone and I would have entered it. However, that's the only reason I did not take that particular trade. So yeah, so that's the hourly. Here we might get, so you can see here for US 30, we have this hourly sell rejection area that has been created, and then we have this daily sell rejection area that has been created as well. So remember, forget about the term sell or buy after each one of them. It doesn't really matter. Because you can use a sell area for a buy, you can use a buy area for a sell. So here, if we turn on the zones, now this particular one, this is a buy for US 30 that I will probably take. So if we do get a candle that tests, so you can see here, based off of these three confluences, if we do get a candle, the first candle to interact with this hourly sell, fails to close above it. So it touches that area and closes back above. So that would satisfy confluence number one. And then confluence number two is if buying, make sure you're in a green zone. If selling, make sure you're in a red zone. So this particular one as well, since if we do get that closure above or rejection and closure above, then again here, perfect, we're in a green zone. And then number three, do we have any bullish or bearish order blocks around our entries? No, we do not. So this would be an A setup. So what I consider an A plus setup is assuming we would have maybe a bullish order block somewhere around there, somewhere around the entry, but we do not. But this one would be a A plus setup because it satisfies all three confluences. So in the next hour, which is in 50 minutes, and I don't think I'll stick around for that long. If we do get a rejection and closure above 44,309 on US 30, so remember, this candle has to come down, interact with that level, and close back above. I will be setting a pending buy order on US 30, and I'll send it in the Discord too if it validates. Setting a pending buy there at 44,308. So let's assume the trade validates. Let's see how big our stop loss would need to be. So by default, TradingView gives us a 93 point stop loss. So rounding off to the nearest or rounding up to the nearest number would get like 100 point stop loss. Now, what is the issue with that stop loss? If you look at the issue with that stop loss, it's not even below this previous low that's right here, right? Also, we do have this daily sell area right here. This daily sell area right here is also an area where price can come down and reject from. So what I would want to do is to have a wider stop loss that accounts for being below this previous low and also being below this level of rejection, where I do expect if price comes down here, it is possible that price can reject. And I also don't want the stop loss to be too close to it in order to avoid getting stopped out. So maybe I want a wider, maybe 50 points from this rejection area, somewhere like this. So let's see how big that stop loss would be. So it would be like a 250 point stop loss for US 30, which is pretty good. Considering this one would be sort of a intraday trade. If you want to be safer, maybe doing a 300 point stop loss, but stop loss and TP. Now the only see for this 250 point TP and stop loss, again we ask ourselves if this is the optimal level for US 30 to come in and pick up buyers before going to the next level of sellers. What do we have here? We have this hourly, we have this high and low of the hourly order block, and we also have a supply zone right up there. And where is our TP? Our TP is literally right up there. So in theory, it does make sense to have an entry here if they're going to ride it to the next area of supply before maybe they put it back down. So anyway, if this trade if this position closes or if we get an hourly rejection there at any time during today, I will be looking to take that sell, that buy on US 30, so long as that demand level gets, sticks. So we'll see how that goes. It might not be on this hourly candle because you can already see the rejection that's happening. So that might validate either in this hour or the next or during the day. So for this gold trade, again, this particular one, I'm still in it. I'm still in it. So I'll just keep following it for the day. But again, just as a reminder, my top strategies is the trend line and SAR rejection, which is what I went over in the previous chart, the chart that has the rejection support, rejection resistance. My second best performing strategy is this trend line. No, I'm sorry, is the test and rejection entry. And then last but not least, this break and continuation entry. Again, the big issue with any break and continuation entry is that it's subject to a lot of manipulation. So, but if it does line up, I'll be taking it, but I'll only be taking it with one account. I wouldn't be taking it with most of my accounts. So that's how I'll ideally be lowering the risk. And then let's see. Okay, so let's see what we have here for US 30. All right, so let me show you another reason why I don't like trading this lower time frames as much. So the lower time frames, 15 minute, 30 minute, even if you want to start back down at the 5 minute and 3 minute, you can still use the strategy as is with those three confluences. It will give you more trades, but the question is, do more trades equate to more profitability? So here, I do see this entry on the 15-minute time frame. It's rejecting off of the 30-minute SAR level. Again, keep in mind I only trade 1 hour levels and above. But if you're trading 15-minute and 30-minute, you want to turn on the 30-minute and 15-minute levels. If you are a 5-minute trader, there's also an option to turn on the 5-minute SAR levels. If you're a 3-minute trader, 1 minute, there's an option to do that as well. So here, this particular trade, if we turn on the zones, so it does satisfy requirement number one, right? So this is what I normally look for when I'm talking about a rejection. I'm looking for a candle to come and interact with that zone, touch that zone, and then close above for a buy. Again, the opposite is true for a sell. So requirement or confluence number one has been satisfied. So this is just a demonstration why sometimes I don't like doing this lower time frames. So confluence number one has been satisfied here. Confluence number two would be if buying, make sure you're in a green zone. If selling, make sure you're in a red zone. So this particular one, we are already in a demand zone, right? So, and then the last one, do we have any opposing order blocks around this zone? No, we do not. So again, this is an A plus setup. The best case scenario is to have a bullish order block around your entry or bearish order block, depending on your level or on the direction of your trade. But anyway, now that is what makes it like an A plus plus setup. But this one, I would just consider it as an A plus. I'm sorry, as an A setup. So here, it satisfies all three confluences. So you go ahead and do your TP and stop loss. Here, Trading View gives you like a uh 40 point stop loss and TP. So you can do 50 point, but again, right, you want to also look at it visually. Stop loss, you want it to be below the previous low, or also be below this previous. So same thing that's setting up on the hourly time frame. So remember, price, whatever is showing up on the hourly time frame. So you see what's happening here on the hourly time frame, how we have these two levels down here is the same thing that's happening on the lower time frames, right? It's just because it's starting on the lower time frames and then goes up. But price, right? Price, whatever is happening on the 1 minute, eventually it catches up to every higher time frame. So here, if I was taking this, if I was doing this, I would want my stop loss to be below this lows. So in any case, for this particular trade, I would do 100 point TP and stop loss. I really don't do like 70 or 80. I like going for, 50, anything that has a 5 or anything that has like a 0, like a whole number, like 150, something like that, 250. So for this particular entry, I would have set a pending order there. And you can see for this entry, for this trade, you see what would have happened. I would have gotten stopped out for that trade. So gotten stopped out, and then price would have come back and almost gone to TP. So this it doesn't mean that that's the only reason why I don't trade small or lower time frames, but this can also happen on bigger time frames. So that's another big reason why you always want to make sure your stop loss is far enough to avoid getting manipulated out of your trade and then price reversing back up. So again, here for US 30 as well, there is an entry for this in this hourly sell region right here. So if we turn on the zones, we have an entry for a buy here. I really wish this was maybe like an hourly time frame. So here, you can get away with 1,000 point TP and stop loss, but here 15, I would go for 150 just to avoid another spike. So if I was trading a 15-minute time frame on US 30, I would now be setting my pending order at 44,384. Now, a question would be, why didn't I set a pending order here and here? Because this candle that has given us these three entries has closed above this 15-minute sell, has closed above this 30-minute sell, has closed above this hourly sell. So the key thing is to always set your pending order at the most optimal level. So if you have a candle that has rejected like 3 SAR levels in this instance, you want to go, if you're doing a buy, you want to set your pending order at the lowest level. If you have a candle that has rejected and closed below multiple SARs from the top, you want to set your pending order at the topmost SAR level, because here, sure, you can set your pending order here, but then this would mean for you to now expand your stop loss again, right? So you want to optimize, you want to maximize. You don't want such a wide take profit that the trade keeps going on for days and days. So remember, you're targeting to be, for these strategies, you'd be targeting to be an intraday trader. So again, here, the most optimal area to set a pending order would be this particular one. And that is if I was trading on the 15-minute time frame, which I'm not. But use the same analogy for the hourly time frame. For the 4-hour time frame, you want to set your pending order on the most optimal level. So same thing here on the 30-minute time frame. So the 15-minute entry lines up with the 30-minute entry. So these are pretty good confluences. So if you remember, when I talked about on the hourly time frame, what I'm looking for here, so we can already see, oh, look at gold. We can already see on the 15-minute time frame, we have that pending buy around 44,380. Where did I say I would want to be taking my buy on gold? I'm sorry, on US 30 on the hourly, around 44,300 area. So you can see how the price action on the 15-minute and 30-minute is also pushing up to the hourly time frame. So buys on US 30 look good between 44,380 to 44,160 area. But for me, I'm only going to take a buy on US 30 on the hourly time frame, and not the 15-minute, and not the 30-minute time frame. For gold, so for gold here, you can see, so nothing on the 15. So this was that 15-minute entry I was talking about. If somebody wanted to enter, so again, I do not take those entries on the 15-minute, but that would have been a valid setup. And this, still just goes to show, if as much as this was an A+ setup, you can still be in drawdown for an A+ setup. Then on the 30-minute time frame, what do we have here? On the 30-minute time frame, we are creating that rejection level to the upside, right? Right there at 44, 28.76. So if I know this is being created and I can see it's being created on the hourly, then I go up to the hourly. So now, if we do get an entry here on gold, so you can see we've had that hourly buy. So now this is a trade. If it does validate, I'll be taking this sell on gold now on all of my accounts. So this sell, I'm only in one account, which I don't mind using just to get metrics for this break and continuation. But if we do get an entry here, let's see if we're still in a supply zone. So the supply zone has gotten taken out by this bullish push. So if we do get a rejection off of this hourly buy that has been set at 28.76, and then we get price going up and then closing back below, and then if I do turn on the zones indicator, I do see that we're in a red zone. I'll be setting a pending sell order on gold at 28.76. Now, given where gold is right now, this next psychological level is maybe 2900 actually, or 2890, not 2900, 2890. So here, if I were to take this sell on gold, this is gonna be pretty high. I'll probably go for like a $20 stop loss and then $20 TP. Because if gold gets to 28.97, because my stop loss then would be at 28.97. So if gold comes here 28.96, I expect gold to shoot to 29.20. So remember those whole numbers I was talking about, those psychological levels. So if gold comes to 2900-ish area, I expect it to go to 29.90 at 29.20 before making any meaningful reversal. But if I do get a valid sell here on gold, now I'll be taking this sell on most of my accounts. But we still have an hour before even this candle attempts to close. So we'll see. Whatever validates, whether it's this US 30 trade or this gold trade, if it does validate, I will send it in the Discord as an official trade. So I know this, during this whole period since I got back, we haven't taken any official trades, but that's fine. But if either this US 30 trade validates, this US 30 trade for a buy validates in any of these zones right here, I will send that out. So I'm looking for a buy either somewhere here, or if we do get a sell entry for gold at 28.76 area, I will send it in the Discord. So we'll know more. I don't think US 30 will come back in the next hour. So actually not next hour. So we have 37 minutes till the current hourly candle closes. So I'm not sure US 30 is going to come back down here. Given that we are also at this 9 and 200 EMAs, we might get this gold entry. Now, the only way that this gold entry does not validate, it can easily validate confluence number one. We can get a reaction off of this level and closure below. But the thing that I see it not validating is a supply zone. So you can see we don't have any supply up there. We have this supply that's creeping in from the left, but it's going candle to candle. So I don't even consider this active supply. So I did tell you guys the supply and demand zones that I'm looking at are the ones that go all the way to the right. So these ones that are creeping in, these ones can easily get taken out by this established demand level. So unless we get a rejection off of this hourly buy, and then we have an established supply zone. That's the only way that I would be sending that in the Discord. So if we don't get that, if you don't see me send anything, just know that some of those confluences did not align. So right now, the only trade again that I'm in is this sell on US on gold that's based off of break and continuation level. And then if we do get the other one, for 28.76, I will be taking it on most of my accounts. Oh, actually, only the accounts that I have for gold, because nowadays I don't really mix instruments on most of my accounts. But anyway, so that'll be it. So this week I'm not sure we're even gonna get any trades. So tomorrow is Thursday. For Friday I don't really plan on trading anytime after 12 noon. So if we don't get any trades uh for this week, that's fine. And we'll just wait for the markets to, give better entries. But other than that, unless there are any other questions, that will be it for the day. Here again okay, so let's see what happens on this 30-minute candle. So we have 5 more minutes before this 30-minute candle closes. If we do get a closure below this 30-minute entry, for anybody who's taking 30, for anybody who trades the 30-minute time frame, and for anybody who has a confluence for sales on gold at 28.73, that would be a sell. So we'll just see how this closes. Just to again recap again, for me, I'm not trading, or I don't trade 30-minute levels and below, or 30-minute timeframes and below. So this one, I just again want to recap, because I did mention most of these live sessions will just be going over the strategies over and over, just to make sure there's an understanding of them. So for this one, the only way this would validate for a sell is if we tap that hourly buy area and close below it, or in the next 4 minutes, price comes all the way down and closes below this 30-minute buy. Because if it does that, so the only it has already currently two confluences are met. Confluence number two, we're in a supply zone for gold. Confluence number three, we don't have any bullish order block. I'm sorry, we don't have any order blocks around this zone, whether bullish or bearish. So currently, confluences 2 and 3 are met. So the question is, will we get confluence number 1 to line up? And if we do, then we just go through it and see whether there's any entries for anybody out there who would be in like a 30-minute one. So just a reminder, not in this one. So this one, let me put this, not in this. Um, Oh, wait. Okay. Yeah. So not in this trade. So this is just a markup for documentation. So and this is another reason why I would advise you guys to stick to 1 hour timeframes and above, because so let's assume you enter this trade on the 15-minute time frame and it loses, and then this hourly entry lines up, right? And then this hourly entry wins. So let's assume you get into the 15-minute and then you get into the hourly. You'd ideally end your day at break even. But let's assume you don't care about what happens on the 15-minute and 30-minute timeframes, and then you just stick to the 1 hour timeframes, like I do, 1 hour, 4 hour, and daily timeframes like I do, and this trade wins. You'd be up for the day, right? So for me, the goal this year is to take fewer trades, but take more high probability setups, which is what, for me, I've found the larger timeframes do. Now, it doesn't mean that hourly timeframes and above will always win. But on the other hand, too, it doesn't mean that lower timeframes and below will always lose. It's a question of where do you get your probabilities, right? So for higher timeframes, I've found that lesser trades, high win rate. Lower timeframes, more trades, average win rate. So currently, again, gold is still pushing. So in this hour, in this minute and 40. So if this closes above, or based off of the way it's pushing, I'm almost sure that it will get rid of this supply zone. And let's see how this one will close up there. It's pretty interesting how in 2023, I think in 2023, the range of gold was only $300, but in 2024, I think last year gold's range was what, close to $1,000. So it's pretty interesting how during the last year gold has had like such a wide range. So let's see in 54 seconds how this particular candle will close. All right. So for anybody who has a confluence for a sell on gold, that is an entry right there for gold. For anybody who has, again, I really wish this was this is what I'm waiting to happen on the hourly time frame. I need in the next 30 minutes for this, for price to close below that entry. But you can see price has already started, possibly showing that reversal. So this one would give you a 30, what is this? $3 stop loss. So maybe go for a $5 stop loss. All right. I'll stay on the stream for the 11 a.m. candle to see if we'll get that hourly entry so that I will take it as an official entry. So we'll just stay on the stream for 30 more minutes. So again, same thing here. So you see here on the 15-minute time frame, if you had entered this trade, you'd be in drawdown ideally. It did line up. It was an A+ setup. It did line up with all entries. But the question is, here you can easily get stopped out and then price to come back all the way back down. Same thing here for the 30-minute time frame. Yes, this is an A+, not A+, it's an A setup because it meets confluences 1, 2, and 3. However, wouldn't you rather wait on what's going to happen here on the hourly time frame? Because here, if this hourly candle closes above 28.77, I'm not going to take that sell on gold. But if I was already in this 15-minute trade, right? If I was already in this 15-minute trade, I would be ideally, 80%, 90% in drawdown. And actually, it's not looking good for this 15-minute setup. So same thing here for this 30-minute setup. So this was an A setup. And same thing here, I will mark this up with that notice again. So I am not in this particular one. So it just depends on your own confluences. My confluences are, I have to be trading on the hourly time frame and above. So same thing here. I'm not in this trade as well. I'm waiting for the hourly setup. But, right, just want to, again, I'm doing this so that I can take screenshots for this so that I can put it in the PDF journal or PDF hand booklet that I'm creating so that you guys don't, right, you guys can trade when I'm not on the live session. You guys can trade Asia if you want. You guys can trade London if you want, depending on what trader you are. So yeah, I'll stay on the stream for 25 more minutes to see if we'll get this hourly entry. So this is the entry I'm looking at for gold, this sell entry, and hopefully we do get it. But if price closes above it, I will not take it. See, US 30. Huh. 30-minute. All right, let me share the other screen in the meantime as we wait to see what happens for gold. Share the trend line screen. So the trend line screen or trend line strategy here. Price for US 30 on the 15-minute time frame, it's in between the trend lines. For the 30-minute time frame, now here we do have a rejection of support on US 30. If we turn on the zones again, we do have demand here. So here we do have a possible buy on US 30 here. If price has closed above one. So this is the same thing I was telling you guys earlier. This candle that has the rejection signal has closed above this SAR, this one and this one. But we shoot for the most optimal one, which would be down here. Now, this again satisfies confluences 1 and 2. So it's a rejection of support. We're in a green zone or right above the green zone. However, we do have this bearish order blocks here. So we have a weekly bearish low order block. We have an hourly bearish low. So this is not even, again, a trade I would take because my buy is literally next to 3 order blocks. The low of a weekly order block, the low of a weekly bearish order block, the low of a hourly bearish order block, and the high of a hourly bearish order block. So I was hoping this would have been a nice entry for US 30, but again, nothing there. For sales on US 30, nothing, of course, because price is in between no, what was that? No, for gold, no. So price, there's no entry for gold because gold is ideally around the all-time high. So we don't expect any structure up there. So we don't expect any entries for gold here on the 15-minute time frame. Oh, so this was the area we're talking about, BTC overlapping, the zones overlapping. So nothing again for BTC. So we'll just wait for this hourly entry on gold so that we see if we can catch that. So I'll move to the other chart. So this would have been that 30 minutes. So I really wish this would have been I hope this is what's going to happen on the hourly entry. But so again, it doesn't mean that lower time frames that like 15-minute and 30-minute time frames are bad. I just, it's just not my preference to trade them. But for that 30-minute trade, it would be running for anybody who had any confluences for sales. But that is an area to watch, right? So this is ideally what you want to see with this rejection, which is why I like the rejection entry. The rejection entry, most of the times it's going to give you wicks. So it's, once a level is created, it's either going to blow past it and close above or below it, or it's going to get to it and have a wick and reject to either downside or upside depending on the direction you're trading. The reason I prefer the rejection strategy as opposed to the break and continuation strategy is that the rejection strategy is going to give you those wicks. So whatever those wicks are telling you is that that price point where that level has been created is a zone of interest that that's pretty, like you are at the at the good area to either look for that buy or sell. The big issue I have with the break and continuation entry, which is what is here, is that it's subject to being manipulated. So it's subject to that accumulation, accumulation, manipulation, and then distribution. So that is the only big hurdle with the break and continuation entry. But other than that, I really, really love this rejection entry, or rejection strategy per se. Wait, let me turn on my other account so that I should be ready. So we have 22 minutes. Moving on the 4 hour levels. Here for the 4 hour zones, nothing. Nice. 20 more minutes. I don't know, honestly, what are we going to do for 20 minutes? Let's see what else. What else is there? Um, hmm, let me see something. Layout. I haven't looked at this in forever. I don't know if you guys remember when we used to do the golden crosses and death crosses. Interesting. Mm. What other strategies did we use to trade? Let me see. Reversal strategy. I think I remember this one. Um, Nothing there. All right. Hopefully we get this hourly entry. If we do not, yes. All right, so 18 more minutes for that one. See this one. Wow, gold is really, really pushing. Really. Hmm. All right, 15 more minutes. I'm not sure if this will close below. If this will close below here, but we'll see. But if it does close below, I'm hoping we get a big weak rejection. If we do close below, if we do come back and close below 2876, I'm hoping the rejection is pretty heavy. So for this one again, if this trade does validate, let's see. We also need to be, so here's the other part, right? Unless we get a big weak rejection for this entry right here, you can already see the supply has been taken out. So the supply that was there that I was talking about has been taken out. So I don't even think this will validate unless we get a big, big push to the downside. I don't see this trade validating. As much as it might validate confluence number one and confluence number three, it will probably not validate confluence number two because we need to see sellers here. We need to see a big supply zone that's moving all the way to the right, which currently that's not happening. So I don't see, I mean, I'll still wait for 13 minutes, but I don't see any trade here for gold. I really wish we had some buy setups, and the buy setups would have ideally come from the trend line and SAR rejection like we got last week, but nothing, nothing here for a buy. But let's see how this closes in the next 13 minutes. I'm only going to take it if all three confluences align. So if only two confluences align, I'm not taking it. We have to get the only way right now to get that supply zone that goes all the way to the right to load is for price to push up pretty heavy and give us like a big wick. So hopefully we do get that, but if we do not, then it is what it is. We'll just wait for the next setup. Same thing for US 30 here. So this hourly entry for US 30 here, I was really hoping to, if price comes back up, to enter a sell here, but any sell you enter here would not be in line with confluence number three because here you can see we have this 4-hour bullish low order block. So if price gets up here, again, you wouldn't want to take a sell here because we do have that 4-hour bullish low order block, which is right here. So you don't want to be selling into a bullish order block. So even for me today, I think the only trade would be this break and continuation entry. And again, you can see why I do not like those break and continuation entries. But the only other trade would be if we have like a big spike to the downside and price closes below this 28.76 area in the next 11 or so minutes. Ooh. Oh. Gold, gold, gold. So you can see here, same thing for this 30-minute, right? So you can see again, so 15 minutes would have been taken out. So this trade would have lost again, A plus setup, I'm sorry, A setup, but would have lost. Same thing, 30-minute entry as well is not looking too good. So just remember, if you're trading the 15-minute and 30-minute, if you're trading especially this strategy that you can trade the same confluences across time frames, if you're trading lower time frames, just know the entry will eventually show up on the higher time frame. And if it's a fake out or price is going against you in the lower time frame, you're most likely going to get a better entry on a higher time frame because the higher time frame, because let's assume that this is just taking out liquidity for everybody who's thinking that gold is going to sell, is going to sell. So you don't want to catch the opposite of what's happening on the lower time frames, right? But if the gold is eventually going to come back down, you're probably going to get a better confluence on the higher time frame because after all the liquidity has been taken out on these lower time frames, and you can see the 30-minute as well for this particular one, if you would have entered again, right, you'd have lost. So you'd have had two back-to-back losses on gold here if you took the 15-minute and 30-minute. Now for me, I might still lose this. The only trade that I'm in, again, not my best or my preferred strategy, but the break and continuation strategy. It's on the hourly time frame, right? And also the hourly time frames of these bigger time frames will give you a wider TP and stop loss, such that if you lose that trade, you'll just be like, okay, but price just went against me so heavily. There's nothing I could have done, compared to this lower time frames where in this instance this one was a $10 TP and stop loss, same thing as this one, right? This one was a $5 one. So this smaller time frames or lower time frames will give you a smaller TP and stop loss. But here, and same thing I think we saw for US 30, this US 30 buy that I showed you guys here. As much as you'd have gone for that 100 point, right here, you see what would have happened? Price would have gone, taken you out, and then gone straight up to TP. So this is the annoying thing about these lower time frames. It's like the TP is not as wide, but if you think it's wide enough, price can easily come and just take you out exactly at your stop loss and then go back up and go to TP. So for me, lower time frames, I just find them frustrating. But anyway, that's just for me. It doesn't have to be for everybody. But you can see for me, my 1 hour time frame, as much as I'm like 90% in drawdown for this one trade, I just know that it is possible that it can reverse from here. It doesn't have to, but I went for a wide enough stop loss and TP compared to what these lower time frames were giving me. So we have 6 more minutes. So the best case scenario here is for gold to reverse back down. So remember, I'm not even paying attention to this break and continuation entry that I'm in right now. What I'm paying attention to is that I'm looking to see if we can get a final push down for gold back and close below this 28.76 area. And then we close with a supply area that goes all the way to the right of the screen. And then in that instance, I would be looking to set a pending order at 28.75, and then I would be looking to see if I can write price down. But a lot can happen in those 5 minutes. Gold can shoot up, take me out of this trade, and close above this hourly buy. If gold closes above this hourly buy, I'm not really looking for any others. And actually, if gold closes above this hourly buy, the next possible rejection I can have on gold for a sell will be on the 4 hour time frame, because this hourly buy will remain there for a couple of hours. So my next best entry for a sell on gold would either be tomorrow or maybe later on today if we do create. You see this 4 hour buy right here, which served as support on this region for price to go up. Now, depending on however many candles, this buy will shift to the top here at some point. It can be today, it can be tomorrow. But for today, if I do not get this hourly buy entry here, if price does not close below this zone right here, then I'm not even hopeful to get any other hourly buy entry during the day. So 4 more minutes. If we do not get that, then we'll just call it a day and then just wait for excuse me, we'll just wait for tomorrow. Let me update this real quick. So I need to create a new chart. Did I do it? 2025. Give me one moment. The let's see. Um, um, find and replace 2024, 2025. Wait. Uh, oh, no, 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 no. Wait. No, the sheet. Um, okay. Hopefully I didn't replace the other one. So we did not trade in January. So January, Wednesday. Mm, 1, 2, 3, 4, 5. So no trades, no official trades then in January, February. See this one for last year. I think okay. February. Friday. So February. 1, 2, 3, 4. The third. Hmm. So it's last week. So there were no official trades last week. Oh, wait, never mind. I've gone too far. So no official trades last week for January. No official trades. So we didn't take any trades Monday, Tuesday. So we'll see if we get anything for today. All right. In 1 minute, 30 seconds. I don't think we'll get, honestly, I don't think we'll get any of this. I don't think we'll get this set up. So if we don't get it, then that's gonna be it for today's live session. I will just wait for the next setup. Same thing here for US 30. It's just in a big consolidation. And then don't forget that Friday is NFP. So you always expect awkward price movements. So either a lot of consolidation or just one directional movement before NFP. So actually Friday's NFP might be a little too crazy with all of the things that have been going on in the political scene this past couple of weeks. NFP might be pretty crazy. And it might shoot gold up to 3,000. That is definitely a possibility. All right, so 20 seconds. So this hourly candle, I don't think it's going to close below this level right here. So nothing as well. So for today as well, no official trades. The break and continuation entry, I took it before the live session. So just remember, any official trade is any trade I go over, either I send in the Discord or I take during the live session. So you can see here, so this candle closed above this level, this hourly buy level. So again, it invalidates confluence number one. So without confluence number one, especially if you're looking for a rejection entry, if there's no rejection, then you go ahead and just forget about that. So unfortunately, no sell for gold or no entry for gold. US 30 rejection support. Let me look at the other chart. The other trend line and SCR rejection, nothing as well there. So yeah, so that will be it for today's live session. Yeah, so just wait. For during this market, a lot of people will end up, they normally end up blowing their accounts, and I used to be one of them, where I just used to, I get an account, I take a sell, like for right now on gold, thinking that price will reverse, and then you end up blowing your account. You buy another account, you do the same thing. So the best thing, just wait, have your confluences. If your confluences do not align, just wait until they do, and that will be it. But if anybody has any questions, you can reach out to me in the Discord, and that will be it for today. I will see you guys during tomorrow's live session. All right, guys, see ya.